So I can share the link when you go live. Is it going to be on?
Yeah, I'm gonna share it. So we are live already. So yeah, I'm gonna share it just so.
Okay.
Hey guys, good afternoon. So we're here again. Noura, I am the nonprofit CFO, and Shane, the negotiator. We are here today to talk about what you need to get done. Like, how do you file your taxes for your business? Um, so we're gonna also share our links so you can connect with us on these links whenever you need us. And I guess now you need us, so go ahead and connect with us. So yeah, so we are going to start with talking about like business structure. Like as you guys know, there's like multiple business structure. Most people start with LLC. I know there's a lot of talk about start with s-corp, start with s-corp, but a lot of people do not realize that s-corp is just an election that you elect, telling the IRS, okay, I want to be taxed as an s-corp. So we're gonna talk about that, and we're gonna talk about C corporation and more. So I just first like I want to welcome Shane. Like we've been here together before, and we will always come together to you to talk, and so you can actually speak to us and please write your question on the comment if you have any question, and we will be answering your call. Thank you, Shane, for joining me again through this busy season. I know you're so busy, so thank you for being here.
No problem. No problem. I'm excited. I'm always excited to jump on video to talk about tax and accounting and also to do collaborations. As I always
Mhm.
say, no competition, only collaboration. So I'm definitely
Yes.
excited to have this conversation today. So
Awesome.
just to so as we were chatting before we got started on what things are we going to talk about. We did decide a few hours ago what we're going to talk about, but we were just kind of recapping some things. This tax season, it's different. You guys are different. It's like everybody seems to be dragging. So I just wanted to just throw that in there before we jumped in today's topic. Everyone's dragging this year. Like, what's going on with you guys? Pop it in the comments. Let us know what are you feeling? Any professionals, or if you're not a professional and you need our services, and what's going on with you guys? Like, why are you taking so long to load your documents? Why don't you have your documents? If you've been doing your taxes for the last 3+ years or more with your business, why you don't know what documents you need every year? Like, just drop it in the chat and let us know what is really
Mhm.
going on. What can we do different to help you help yourself? Okay.
Yeah, just to answer the comments. Hi, Brittany. So we have Brittany from Writing Visions. She's my new partner. Like we're not partner in business, but we're partnering as businesses together.
Okay.
She's a grant writer. So hi, Brittany. And also we have a LinkedIn user says here. So I don't see the name. Nonprofit too. Yeah, we're gonna talk about nonprofit too because we also do the nonprofits 990 as well. So yeah, like Shane was saying, we want to help you. So let us know how can we help you and what we
Yep.
can do different to help you more. So to make it easier for you, because we do have checklists, we do have systems that is secure, so you guys can upload your documents. Um, we do have everything for you, but maybe we are missing something that makes things easier for you that we are not aware of because we're looking from our end, not from your end. So please let us know. That will be really helpful. Um, yeah. So do you want to start, Shane? Like, break it out,
Yeah, sure.
or not like more
Um,
with the.
yes, I just want to add in before we go on to the topic is that yes, help us to help you, but also, you do have to take your own responsibility as well. So although we are providing you with the resources and, checklists and everything that you're needed, that's what you're going to need to file your taxes. It's like once you sat with us this year, next year you should already know the types of documents that you're going to use. You're going to use the same exact documents. So you write it down in a book, make a list so that you know what to provide to us. You know what documents you're going to have to collect throughout the year, keep it in a folder digitally or not. You have to do your part so that we can help you better. So that's what I wanted to add in as well, because we're not taking all the responsibilities, because it's a team effort. You have to give us what's needed and we then help you. So with that being said, we're going to move on to today's topic. So we're going to talk about the different types of forms that you're going to need to file your taxes based on the type of business that you have. So we are going to start with the 1040, because most people have to, you end up, all roads lead to the 1040 anyways. So we're going to talk about the 1040 as well. So we'll add that last, because some of them flow over to the 1040. So we'll add that last. So for the first one that I want to start with, we're going to talk about the Schedule C's, which is if you have an LLC, or even if you do not have an LLC, you are a sole proprietor, meaning you are either using your social security number or you have an EIN number. You did not incorporate your business, so you don't have an LLC or an s-corp, c-corp, nothing, and you're just working as a 1099. You're like independent contractor somewhere, or you have a business, you just didn't incorporate it yet, and you're operational. You are considered a sole proprietor. And of course, if you have the LLC, you will both file on the Schedule C, which is called the profit and loss. Okay, so I hope you guys understand that part so far. So I know there's usually confusion between a sole proprietor and the LLC, and oftentimes sole proprietors are like, "Well, can I write this off? You are a business also, so yes, you can write off the same things that the LLC can essentially write off." So some of the things that's needed for that profit and loss, and I'll let Noura go into list a few things that you're going to need for that.
Mm-hmm. Thank you for that, Shane. So yeah, so one thing I want to actually tell you guys before I list few things, I notice a lot of people think that anything, if you sell something for $10, people think you're gonna pay taxes for that $10, while in fact that is your revenue, meaning that is still you are a business owner, even if you don't have a business incorporated. You can deduct, you have to deduct expenses, because that the profit is your income. That is what you have to include in your income. So things you can deduct is, and it will give you actually a lot of saving, home office deduction. Even if your business is just you are doing those services like Uber, like having DoorDash, any of these
Yeah.
on-site services, you actually are considered a business. And also, you probably doing some administrative stuff at home. So you can take advantage of that home office deduction. It can saves you thousands of dollars. And actually, either it doesn't matter if you're renting or owning your home, still you can take the home office deduction. That is really important. Another thing is gas or vehicle expenses. There's like multiple way to actually take that. And we as tax professional, if you provide us with good records, we see which one make more sense for you to give it to you. But you have to provide that to us. And you can't wait until last minute and want to take advantage of that.
Right.
So you want to make sure you actually provide that ahead of time. And if you're not ready, then you will be ready for extension. But keep in mind that extension is extension to file, not extension to pay. If you owe money, you will have to pay that money, because if you do not pay that money, even when you do an extension, then you have to actually pay penalty and interest if you did not pay, if you owe money, especially if you are not paying estimated taxes in a quarterly basis. So you want to be aware of that. Also, you so this is like Shane said, like you only file one return, even though you have a business. Even if you're incorporated, this is your personal return. But don't forget to do that. I've seen a lot of people like providing like spouse's information without providing their business information and doing their taxes. If we don't know you have a business, we're going to file without you having a business. You're going to miss out, and you might be in trouble later on because you don't have that actually
The income. Yeah.
income reported, and it's your responsibility to report all income.
Right.
Mhm.
Absolutely.
Yeah.
And that's even including if when you got those 1099. So even if you might be doing some contract work and you might be under the threshold, so they may not issue a 1099. When under the threshold meaning under $600, so they may not issue that 1099 because you're only required to issue one if you pay your contractor $600 or more. So if you made $599, you're not likely not going to get a 1099, and you're still responsible for reporting that income. So you do have to keep track of that throughout the year. So it's not a good idea to wait until January or February or even March when you're ready to file, and then you're trying to reconstruct your income at that time. Keep track of your income every time you get paid so that it's so much easier for you to put them together when necessary. Of course, we're always talking about bookkeeping, but we all know you guys are hard headed and you're not going to listen and you're going to do what you want to do anyway. But so do what you want to do a little bit more responsibly. So keep track of these things on your own throughout the year. So when it's time to give us your documents and file, you're not all over the place. So
Yeah.
these things, yeah.
And just to talk about bookkeeping, I know a lot of you guys thinking this is a complimentary, this is something like you can do or not, when in fact, this is actually a compliance. So you cannot be in compliance if you're not doing bookkeeping. And if you get audited, you're going to be in trouble. That's guaranteed, because if you don't do bookkeeping, I guarantee you that you don't have an accurate return, even if you keep track of everything.
Mhm.
You need to have a system and bookkeeping. That is something like putting something for sale. That's essential. That's something you have to actually keep in mind when you start your business. That is an expense. Marketing is important, sales is important, accounting is important, which is bookkeeping. You cannot pay taxes well, like you don't know how much you really owe. Even when we do your taxes, like when you provide us with an Excel sheet, or it's not going to be accurate. The numbers are there, like, are not going to be accurate, but we have nothing to do if you don't want to actually that service. We can't really help you more than that, other than do the best we are. We usually educate you guys, but and tell you that is a requirement and it's a compliance work, but it's your decision at the end of the day. We cannot make a decision um, on your behalf. And I understand that, okay, sometimes like you will be maybe struggling a little bit in your business, but you are the owner. It's okay to invest on that, because this is your business and this is an important part to actually invest on. Accounting is not something that you bypass, whatever the business you have, whether you have LLC, S-corp, C-corp, or a nonprofit. You are required to have a bookkeeping system. That's what we have to fill out, and when we do your return, like for everything, like whether it's like Schedule C, whether it's like um, S-corp, C-corp, and even
Yes.
nonprofit 990. So all of them require bookkeeping, because this is what we have to complete when we do your taxes. But if you don't provide us with good information, we can't really do it. And providing bank accounts, I mean bank statements, is not something that we can do. Like it takes a long time to do bookkeeping and a lot of effort. So that's bookkeeping. So if you do need bookkeeping cleanup, so what you need to do is really do an extension and just hire a professional right now to do the cleanup. And we both do offer this service. So just come to us and let us know. And even if you don't want to work with us, like there's a lot of good accountant over there, that's fine. Just get this help. Don't be on your own.
Right. Right. So yeah, we listed a few things that you're going to be needing for that profit and loss. Um, if you have other income, because you may have the business income that's coming in, you may have another source of income that you're receiving that is not necessarily from the business that you're actively working, but it's the same type of business. So if it's the same type, it can go on that same profit and loss as other income. And the keyword is the same type. So if, let's say, I'm going to make up a business, you were, e-commerce business, so you're selling products and goods on your own, and then you decide to also sell similar products and goods on, I don't know, Amazon or something like that. So Amazon sends you the 1099 for $1,000. I'm just making it up. You can add that to that Schedule C because the same type of business versus having to put them on two separate Schedule Cs. Same type of business that you have. Now, if it was e-commerce and then you were doing coaching for something else, then that's two different Schedule Cs because that's two completely different businesses. So I just wanted to explain that because some of you are coming with multiple streams of income that's as self-employed, and you're confused on why they can't all go on the same Schedule C. That's because they're all different businesses.
Awesome. So if you have any question, let us know in the comments. And let's move to S-corp so we don't keep you here, guys, forever. So S-corp, like I said in the beginning, it is an election. So LLC, it's recognized on the state level, but S-corp is recognized by the IRS, and it's an election you do in a certain point in your business. And we spoke about that like in previous videos. So you can go ahead and watch our previous video about like when you can elect an S-corp. But the deadline for it is March 15, and the deadline for the return also March 15.
Next week.
Yes. Yes. If you haven't started yet and you don't have your bookkeeping ready, you probably need an extension, and make sure you do that. And if you do an extension that for your S-corp return, then that means, guess what? You have to do an extension for your individual tax return because you won't have your K1. And for that, you have to fill in like 1120S, and I will let the experts about talk about it more. Because sorry, you Shane. Just honest, if you don't know why I'm saying this, because Shane loves S-corp, I do too. But we were in the same project. We actually were with other accounts.
Collaboration.
Yeah, we did a book collaboration, and it was actually international bestseller. So it's in both links, so you can go ahead and order that. And S-corp was Shane Bart. So I'll let her talk about it.
Yes, I did write the chapter on S corporation. So Nora's correct. The deadline is next week. So if you have not given a single document to a professional, you're automatically going to be filing an extension because we do need time to file. And you have to keep in mind that you're not the only client that we may potentially have. So you're coming in knowing you are going to have that extension to give you a little bit more time. And just as Noura mentioned, it doesn't mean that you can't pay whatever taxes that are owed. Now, the nice thing about the S corporation is that the S corporation does not pay any taxes. Now, you as the shareholder, you have to pay the taxes. And we'll talk about that when we get to that K1. So you are going to pay the taxes when you file your personal tax. And hopefully you paid those estimated taxes if you needed to. But again, you do not pay it on the behalf of the S corporation. So you don't use the EIN to pay the taxes. You don't use the business name to pay the taxes. You use your personal name, your social security number, and pay the taxes to the federal and then for the state. Okay. So it is going on the 1120S. That is the name of the form that you're going to use to file. And the documents that you're going to need is similar to that of the Schedule C. You know, you're going to need that profit and loss. So you need bookkeeping, especially if you are an S corporation. You're a little bit higher level than the LLC on that Schedule C. So you are a little bit more scrutinized with the IRS. So you want to have accurate bookkeeping. So you're going to need that profit and loss sheet, no bank statements. Like, we're S corporation, we're corporations. You got to govern yourself like a corporation. So you're going to need, in addition to your bookkeeping, hopefully you were paying yourself on payroll. So you're going to need the amounts that you paid for the W-2s, that you paid on the W-2s for your employees or yourself because you're on payroll. So you're supposed to be paying yourself wages. You're also going to need the 1099s that you have paid for your independent contractors that you may work with. And you're going to need whatever payroll taxes information that you paid because you're going to place that on that 1120S because you want to be able to write that stuff off because you can write off the wages, write off the taxes, the payroll taxes that was paid. That's tax write-off. If you made any charitable contributions, the business, not you personally, did the business make any charitable contributions, that is going to go on that. It's a little bit advanced part of things. If you have been doing tax planning with your professional, like if you come work with us, tax planning, you would likely have a retirement account set up. So the amount that you placed into your retirement for that year, that goes on that 1120S because that's deductible. It reduces your income. So that's a little sneak tidbit on the tax planning, and that is in the book that Noura was just talking about, retirement plans. So get that book, and this information is also in there. What else am I missing that I can't think of right now?
Yeah, just want to mention actually, you covered a lot of things, most of the things. But one thing I want to remind you guys, if you are an S-corp, then that means that you cannot get a distribution unless you are paying yourself a reasonable salary. That means you have a payroll. Otherwise, you cannot touch the money. And also another thing, actually, I've had like people telling me like, we didn't get a distribution. So they are a partner of shareholders on the S-corp.
Mhm.
And I was like, it doesn't matter. I still need that K1. So it doesn't matter what you get a distribution or not, you still get a K1 that should be included in your tax return. So be aware of that. Another thing I want to mention, we spoke, Jane and I actually, we spoke about the quarterly tax return, and that is my chapter in the book. So get the
Mhm.
book. And also I have a course about that on how to
Mhm.
exactly what to use, what the EIN or your social security, all of these. I have that and packaged in a course where like videos, like, and I walk you through everything. So go get that, get the book. And that's going to be really a good investment on you. Like the book
Yeah,
covers a lot of things.
absolutely.
Yeah. So yeah, that's it for the S
Oh,
corp.
we
Yeah.
forgot before we move on from the S corp. So we talked about the home office expense
Mhm.
when we talked about the Schedule C. So when you have an S corporation, you cannot take the home office expense anymore. Boo! But you can in a different way. You can take it on if you have what's called an accountable plan. So remember, you are a little bit higher level than the Schedule C filers. It's a little bit higher level. So you are required some corporate things that you can have. So as a corporation, which is the S corporation, at election, you're considered to be a corporation. You have, hi, Marilyn, how you doing? You have the accountable plan is what you're going to need in place. So accountable plan is a employee reimbursement plan. So back in the day when we worked, and some of you still working for places, and you hear about these benefit plans that's out there. Well, the S corporation can have such plan. So what this plan is going to do, it's going to reimburse you, the individual, the shareholder, not the business. The business is going to reimburse you for things that you've purchasing throughout the year on your personal side. So that home office that you have, the rent that you're paying or the mortgage that you're paying, and all of these things that you would write off on the Schedule C, you can get the reimbursement for that throughout the year. Your business is going to give it back to you. So generally at the end of the month, and this is all forms, more documents that you have to keep track of, or you can have us keep track of it for you so you don't have to worry about it. But the business gives you these forms and you fill it out every month. And you say, okay, you write down how much you paid for your rent or your mortgage, the utilities, if you're purchasing additional ink for your printer or whatever it is that you're buying personally with your money, not with the business. And the business is going to reimburse you up to certain amounts. So once you set this up, you're going to have those amounts listed for how much the employee is going to be reimbursed. Now, keep in mind, you may be your only employee right now, but you may end up getting another employee at some point in time. So what's good for one is good for the other. So you can't reimburse yourself all this money and then want to give your employee a little chunk of change. They have to get the same amount. So it's standard for everybody. And that is that is the accountable plan. You're getting your money back throughout the year versus waiting for when you file your taxes. The business writes all of that off when the business files its tax return on that 1120S.
Awesome. Thank you, Shane.
You're
So
welcome.
yeah, guys, don't miss this opportunity because it can save you a lot of taxes,
Yeah.
especially like if you own the business and then your spouse may be on W-2. Like W-2 people pay the most in taxes,
Hmm.
but can save yourself and your spouse like a lot of money just because you have a business. So don't
Absolutely.
neglect that. And we're here to inform you. I know like a lot of you don't know this stuff, but this is what we like to do. We like to have you informed, like let you know what we know, so you don't miss these opportunities, because it can make a lot of difference, especially for those you of you like who might have cash business. Like I know
Yeah.
like some people don't report a lot of things, maybe because they missed it, maybe because they think they
Yeah.
are paying too much taxes. But no, like if you I know if you know the truth, if you know what's happened, how everything works, you will find it in best interest for you to actually report every single penny and do the bookkeeping
Right.
and do
Absolutely.
that. Yeah.
And the one,
So go ahead.
I missed the part to mention, because this part's important. When you are filing that 1120S, it's going to ask you what the start of the year assets were and the end of the year assets. So if we filed your taxes the year before, it's automatically going to transfer over so we're going to have that information already. But if this is the first time you're coming to us, we're going to need to know what assets you had on January 1st of the year. So December 31st and January 1st usually might have the same numbers, but whatever bank accounts amount you had in your bank account, whatever assets your business have, we're going to need to have that total amount to put on your return. And when December 31st comes, we're going to need to know what the end of the year amount was, because that goes on your return as well, because that becomes your basis. So
Mhm.
just to kind of quickly explain that, the basis is going to be, so when you're all like, oh, I have an S corporation now, I want distribution. Everybody want tax-free distributions. Well, in order to get tax-free distributions, you need to have basis. If you don't have the basis, then you can't take any tax-free distribution, because the tax-free part comes from, let's say your assets are 30,000 and you want to take a 20,000 distribution, then you'll be able to take that distribution tax free because you have more assets than you're taking out. Versus the other way around, you're going to pay taxes on the excess. If you have 30K in assets and you want to take 50K, you're going to pay taxes on the difference. And that stuff is in the book to really go and explain it to you. So that's why you definitely, LLC, you need bookkeeping. S corporations, you definitely need bookkeeping. There's no ifs, ands, or buts about it. You definitely need bookkeeping.
Mhm. Yes, definitely. Definitely. Hi, Marlon. So
So we're going to
yeah,
go on to partnerships after that.
yes.
If you don't have anything else to add.
Oh, yes, yes. So partnership, the form, it's also due now, in 15 March 15.
Yep,
Not
next week.
15 days. Like it's not 15 days anymore. It's March 15. So we file 1065. And this is when you actually have the multi-member LLC, when you have partners. That's a partnership. So you also get the schedule from there, so you can actually include it in your return. So you need to have it now, and if you do an extension, again you have to do an extension for your return. Now in partnership, like it's important to have the partnership agreement that specify if there's any guaranteed payment, if there's any distribution going on, anything that you have. Like we have to know what it is, so we can do the correct tax allocation on your forms. And this is also like you must have bookkeeping in order to get the correct return. If you don't
Yeah.
have that, it's going to be a disaster.
Yes.
Disaster. If you actually get audited, it's not going to go well. And also for us, it's going to make our life hard, and you're not gonna actually get everything, because if we don't have the correct information, if we don't have like your agreement, if we don't have like every single details about your agreements and the bookkeeping and how distribution is going and how everything, we're not going to be able to have an accurate return.
Mhm.
We can do the return, it's going to be as good as the information provided to us.
Right.
And this is also where I say like tax planning would be essential there. So you must do tax planning and bookkeeping when you have partnership, s-corp, even LLC, anything. But for those two, like s-corp and partnerships, you must have tax planning.
Yeah.
Um,
Yeah.
yeah,
And bookkeeping. Yeah.
yeah,
Absolutely. And it goes a lot more into it. Like, we all want to start businesses, and You guys are watching those TikTok videos and it's like, yeah, take your tax returns and start a business. You can absolutely do that. But it's more to it than just creating a business, making
Mhm.
money, and then just handing us that and say, okay, this is what I made. It's a lot more to it than just that. It does require the higher level up you go in the types of businesses that you have, the more documentation you're going to be required to maintain, the more steps in your taxes you're going to have to do, and it's going to benefit you. We're not, and again, we're not saying any of these things to scare anyone. I mean, you should be scared because you should be doing the right things, but it's not meant to terrify you. It's just meant to let you know that you need to reach out to the professionals so that you can start taking the steps to get set up. Like, get set up in the beginning as soon as you can, because once you start scaling, and for anyone who has scaled fast, once you have scaled, it's hard to go back and put things in
Mhm.
place. It's not impossible, but it becomes even more difficult.
And
So
more
you do
expensive.
want to you do want to reach out and get the help you need.
Yes, it's gonna be really expensive. First, you're gonna lose a lot of deductions, and you're gonna lose a lot. Like, and it's gonna delay your scale actually
Yeah.
to getting to the next level. It's gonna delay you if you don't do the right thing. And like Shane said, like I hear a lot of people like, I want an S-corp, I want an S-corp. Have you started the business yet? Start as an LLC because it's the less work and less headache. Just get your feet wet, like when you are ready, and just have an accountant on your side. When you are ready, she should
Yeah.
let you know that maybe now we should do tax planning to look into the possibility. Maybe it's good for you, because it's not good for everyone. It
Right.
might be something else, like other formation, maybe good for you.
Right.
So you want to
Right.
have that actually opinion, and start step by step, but know everything what you have to do, so you're not surprised, so you are prepared. Actually, it's
Hmm.
great to have a business. It's great to be your own boss. It's great to do what you love to do most, but you want to do it the right way, so you don't have a heartbreaking after all, and then stressful months and stuff like, I want to go work for someone else because I'm not having any money, because you're not managing your money well. And what I
Yeah.
would say also, not only actually bookkeeping and tax planning, I also encourage you to do some kind of CFO services where you do cash flow management, because this is a significant part, and this is not included with bookkeeping. Usually it's usually something separate. So don't just do bookkeeping, and understand your numbers. Have your accountant explain to you what is this. So there's, you don't have to understand everything, but there's like certain stuff you have to understand as a business owner, so
Yeah.
you are more prepared to do your taxes, more prepared to manage your business.
Yeah.
So
Yeah. So we didn't talk about some of the other things that's needed for that partnership. So
mhm,
just like the LLC and the S corporation, these documents are the same essentially, except you may need to give us your article of organization, not corporation. Corporate articles of corporation is for the C corporations. The article of organization is for the LLCs and the partnerships. You're going to need to give us that so that we can see if you have any required distributions that you have set in place to say, no matter what the business make, this is the guaranteed payments that the partners are going to get. If that is listed there, then that goes on your tax return for the partnership, which is the 1065. We didn't list the name. The 1065 is the tax return that you're going to file. That amount that you taken as that distribution, well, the guaranteed wages, it goes on the 1065 as a write-off. You cannot pay yourself on payroll. You cannot pay yourself a 1099 nor a W-2. Neither one of those things you can do. Now, if you have the guaranteed wages, that goes on your form, but no 1099s and no W-2s for yourself or the other partners. That's a no-no. So the other employees and of course the contractors, you need to issue them their 1099s and their W-2s because that goes on your tax forms as well. So both of those, the S corporation and the partnership, they are flows through to your personal taxes. So you don't file taxes for the partnership or that S corporation, but you as the shareholder for S corporations and the member for the partnership, pay the taxes, if any, on your personal taxes. So you're both going to be all going to be issued a Schedule K1, as Noura mentioned, and that K1 will have each partner's share of wages that they have earned that year from the business on there. So if Noura and I is in a partnership together and Noura got 51% and I got 49% of the business, or it's 50-50 each, and we made 6,000 each, 6,000 for the business. And I'm just small number. We have 6,000, Noura get 3,000, I get 3,000. If it's 51 and 49, of course, Noura get like 29 something. I might get 28 something. I don't. My math is not mathing on the fly today. So it'll be something similar that way. So then that goes on the K1. We each will file that on our personal taxes and take that K1. So you have to give your partners those K1s. So when you file your business tax, because that's first, you'll take your K1s and you'll hand them out to the partners. And you have to file your business tax early enough so that you can give the partners their K1 so they can file, because not all of you are put your partner, your spouse. You may have
Mhm.
partners that are friends, or other people that you met on the internet, you met on TikTok, and you decide to do a business together. You're going to have to give them, and you have to give them in enough time so that they can file their taxes.
Yeah, definitely. And since you mentioned actually cannot be on the payroll, I have seen a lot of you guys like have an LLC and put yourself on the payroll. You cannot do that either. So LLC, you just take honor withdrawal, just
Yeah.
get money from your business, because you and your business are the same. You cannot be on a payroll. You can have people on the payroll. That's not you, but you cannot be on the payroll. So be aware of
Yeah.
that. Do you
Yeah.
wanna move now for C corporations?
Yep, the last one, last but not, no, that's not the last one. We still got two more. We got two more. C corporations, and we got the nonprofits.
Yes. Yes, we're gonna keep the nonprofit to the end.
Yes.
Yeah.
So now we got the C corporations. You want to start off the C corporation? You want me to start off? Go ahead.
Yeah, sure. So C corporation, you have to file 1120. And that's also, we need your agreement and everything. And bookkeeping is must. Now you are a corporation. You are required to have, like, you are no different than Apple and all of these, except for the money you get. But if you manage it well, you
You
don't know
might
where you
be.
can go. Exactly. Like those people like do business right. Like they know they have business plan, they have bookkeeping, they have tax planning, they have everything. So that's why I have that at that level. And you can be like at any level you want if you do things right, like with bookkeeping, with accounting, tax planning, CFO services, also marketing, sales, everything. If you treat
Mhm.
your business as a business, as a corporation, you can get into that level. So
Yeah.
now this C corporation due on April 18th
April.
this year.
Yeah.
Just like your personal, because it has its own entity. Like you don't have to, you will pay taxes on your level, and you pay taxes actually on individual level and at the business level. So it's two
Double
separate,
tax.
double taxation. Yes, but it doesn't mean that it's bad. It depends on part of the business, what type of business you have, and also it depends on what's your exit plan for your business. So you need to be working on your really a tax planning, accountant, and attorney to see all of these, to see like which actually formation would make more sense for you. But if you are a C corporation, let's just you have to know like you're gonna pay double taxation, but as I said, like it's not always bad. Like it can be good
Yeah.
for you.
And some of the things that the forms is similar, like you would have on the S corporation, and even some of them like you would have with the Schedule C. But this is like it's an absolute must for the bookkeeping, because you're going to need your profit and loss. You're going to need the statement of cash flow. You're going to need the balance sheet. And all you know, like, what are you talking about? Yeah, you gotta come sit with one of us, because there's a BB in the big leagues over here. You're going to need all of
Mhm.
these documents because they go on your return. They want to know what the assets are in the business. Does the business have property? The business have this and that? Because it may own other businesses. It's a C corporation, so it's endless what it can own. It can be have public shares. I mean, it's so many. So with this particular one, you do have to Like if you are a C corporation and you don't have bookkeeping, I'm side eyeing you. Like, you sure you got a C corporation? Because you should know better. And
You,
if you don't, because you didn't know, get with someone. If not us, find someone ASAP so that you can put the right things in place because you are on a different level at this point. You got a business.
Mhm. Yeah, exactly.
Yeah, so just as Laura said, it is double taxation. So you have to pay taxes on the C corporation, and then you're going to pay taxes again when you file your personal taxes. So that is the difference between the C corp, the S corp, and the LLC, and some of the documents that you're going to need with that. So that bookkeeping is a must. It's an absolute must.
Hmm. Yeah, it can be very complex, especially when you guys like have this company that owns LLCs and owns a lot of other
Yeah,
things. Like you need to really keep track of
yeah,
everything. You need to have your departments.
yeah,
And-
absolutely.
Mhm.
And it's just, and the same thing. You'll have the accountable plans for the C corporations as well. You can't take home office expenses and things like that. You definitely on a higher level. You have accountable plans. You have retirement. You have 401ks and things like that set up. You may have 100+ employees. Some of you might be smaller C corporations. You may not have that many employees yet, but you're gonna get there at some point in time. If you have a C corporations, you're definitely you're probably making some good money, 500K or more, generally. I mean, you if you have a C corporation and you're making 50K, and you don't need a C corporation. And I'm just being honest with you. You're wasting money.
Mhm.
So if you're not making, I would say 350K or more, and even 350K is lower, then you have the wrong business for this. If you have a C corporation, and that we need to get changed.
Mhm. Yeah, definitely. So just you guys like let us know like in the chat if you have any question. We would love to answer your questions. And hopefully like we covered everything in business side, but now we're going to the last business, which is I say a business because I tell you if you've been following me for a while, you heard me talking probably that having a nonprofit is having a business with a different tax ID or tax um, classification.
Yeah.
So your nonprofits, you if you are in a calendar year, then your return due on uh, May 15th, and you can do it from now. Actually, it's better you the earlier you do it, it's better because if you are looking for funding, those funders are looking for your 990. And I say like there's like three types of 990s where you can do 990 EZ, the N card, and the 990 EZ and the 990 the full form, which I usually advise people to do that if they're looking for funding in the next couple of years. And I know all of you are looking for funding from day one. So I would stay away from the 990 in card, the e-post card that you file on the IRS website.
Mm-hmm.
And at least minimum I would do the 990 easy, and then if you can like 990, because this gives you your donors and your funders more information to work with, so they can see you are transparent, you can handle money, what projects you have, because this is a public information. Another thing I want to touch base here, you cannot, I say you cannot paper file your 990. It will be rejected and you will be penalized. And yes, as a nonprofit, you will see a bill from IRS coming,
Yeah.
maybe not this year, maybe a couple of years later, but for this year.
Yeah.
So don't don't be fooled like with people saying, no, you can just do it. You can just have a volunteer do it. Also, if you are filing an incomplete return, which is incomplete 990, that means also you're gonna get penalized because they will consider you, IRS will consider you that you have not filed, and that's not good. So you will, and you will lose your exempt status. So you have bookkeeping, because on that 990 we have to put your balance sheet and your profit and
Mm-hmm.
loss in there, and you need to have your donor list or grant list,
Mm-hmm.
everything. Anyone who give you $5,000 or more, we need to have their name and how much did they give you.
Yeah.
That is in a different schedule. And a lot of people I've seen, even like people who maybe have a little accounting experience, they do miss a lot of things about 990 because it doesn't tell you what you need to do
Mhm.
unless you really know, like you have done it, you consult with someone who have done it. There's like a lot of schedules a lot of people have been missing,
Yeah.
and I've been getting a lot of actually requests to like, what have we done wrong? What have we done wrong? We got this rejected. And it turns out like either they file paper file or they probably actually miss some of the schedules they have to include.
Yeah.
And if they don't know what they have to do, like they want no, like that is schedule B, schedule O, schedule A, most of the time they should be there. And sometimes you need more than that, but you need to involve everything. Also your board members, all these names has to be there. You cannot have less than 3 board members per IRS if you will have 501c3. So if you have less than that, it will get rejected. And
Hmm.
you will be considered that you did not file a return. So you need to be really careful and avoid paying penalty, because it's better to have actually being consultants, whether it's like accountants, lawyer, staff, than paying penalty.
Yeah.
And that's for all businesses, not
Yeah.
only nonprofits. So you guys, now we are in a great place, because before, like any business or nonprofit, if you want to have a CFO, you would have to pay over 150K a year
Hmm.
plus benefits. So the cost
Yeah.
will be much, much higher.
Yeah.
That's if you are lucky and you got an affordable one. And now you can hire one of us as a CFO, and we can give you the same benefit or more, because we're working with multiple business and we see what goes wrong in the other spaces with a fractional cost. Like it will cost you less than 100K a year to hire one of us as your CFO. And also
Right.
for marketing, same thing for attorneys. It's just a great place like to be. Like actually we can hire people from across the country
Yeah.
for our business. And for
Yeah.
some stuff, yeah, we hire internationally, but for professionals who knows the law, who knows the accounting process, who knows everything, don't go with someone who does not know the tax law
Right.
and also, tax law. And also like if it's a lawyer who does not know the tax, I mean the law, like in the US, like I would get
Yeah.
someone who is in the country. But you have the entire country, you have 52 states, like you can just
Yeah.
go all of us online. You don't need to
Yeah.
even see us in person, so you can
Mhm.
choose and you can get that benefit for your business. You can grow faster. And
Absolutely. Absolutely. And for one thing, for the nonprofit, I mean, everyone's think of nonprofit and you're like, oh, I don't have to pay any taxes. That's the first thing that everybody say. I'm gonna get a nonprofit so I don't have to pay any taxes. Nonprofit doesn't mean no taxes. Because
Mhm.
you can pay taxes, especially if you are making money in the business. Like if you're making monies more than you might get those donations and things like that. But if you're making money in the business over $1,000, then you got, is it $1,000, Nora? Am I correct? Because
Mhm.
Nora's a nonprofit person. Then you're gonna have to pay tax on that. Well, you potentially pay tax on that. So don't think nonprofit no taxes, so you don't have to do the books and all of those things. Because even
Mhm.
if you don't pay a single dime in tax, you still have to keep the books. You still have to show how the business is operating, because it's still a business. So you need
Mhm.
all your T's crossed and all your dotted, especially with the nonprofit. Like we talked about, okay, the S corporation is higher level, the C corporation, woo, but the nonprofit, don't mess with Uncle Sam with that nonprofit. I'm telling you.
Yes, yes. And then when you have the unrelated business income, you have to file 990T in
Yeah.
addition to the 990 you're gonna file. And like Shane said, like you really have to have bookkeeping, because you might lose your exempt status and you might be in jail.
Yeah.
You might be in jail because basically the government says, you are going to do part of our job, so we don't have to do it as a government. So we're
Hmm.
gonna give the taxpayers that break, that they don't have to pay us
Hmm.
taxes on the donation they give to you, because you're doing part of our job. So you
Hmm.
better document that, because we're losing money because you are there.
Yeah. Yeah.
So imagine how serious that can be. So don't mess with that, and make sure you do things right. Because yeah, it can be really like all board members can go can be in trouble, and also the executive director and anybody in the business account,
Absolutely.
the nonprofit account. So make sure and look at your state and see if you have to be to do auditing, because not all state, it's not an IRS requirement, but it's a state level requirement based
Yeah.
on like where are you at. You might have to be to get an audit. Another thing with that, like if you want to get funding, like big funding, like a lot of fund grants like require audits as well.
Hmm.
So yeah, that's it for nonprofit for me. Like, do you have anything else to add?
Nope, not for nonprofits. So I mean, that's pretty much just your area. Like I do not do nonprofits. If you guys come to me and say I got a nonprofit, I text Nora and be like, "You got opening to this person?" I don't do. I do know I'm knowledgeable on nonprofits. I can talk to you about nonprofits. I don't do nonprofits. I choose not to do nonprofits because the compliance is just a little bit too much for my taste. So I just choose not to do nonprofits. I refer you guys out to Nora or anyone else that is doing it. Yes, again, I'm very capable of doing it. I just choose not to because ain't nobody got time for that. I don't. But Nora does. Nora got lots of time for
I love
that.
you guys. Come to me.
And you guys don't listen anyway. So I'm not trying to fool with you with these nonprofits because you're not listening with your Schedule C's. You think you're gonna listen to me with your nonprofits? Mm-mm-mm.
And if you are a tax professional and you need some mentoring and doing 990s, I'm here to help you. So I can check your 990s. So come to me as well. So, so yeah. Well, thank
Oh,
you.
so then
Yeah, go ahead.
don't forget about the talk about the 1040.
Yes, yes. So go ahead. Yeah. Go ahead.
So yeah, so I left the 1040 for last because although 1040 is not considered really business owners, it's more so for employees. As a business owner, you're still using that 1040. So those K1s, when you receive those scheduled K1s from the LLC, I mean from the LLC, from the S corporation and the partnerships, when you get those K1s, the partner share of income, you file that on your personal tax. That's going to go on the Schedule E, which is going to go on, not Schedule E, it's going to go on your 1040 and it's going to add to your income. So if that is the only business that you have, well, that is going to be the only income that you're going to add on there. If not, you may have a job someplace, or you may have dividends that you receive from the bank. You may have investments. You might have bought and sold stocks, or you bought and sold crypto. So those are all income that's going to go on that 1040 and that Schedule K1. That income is going to go over there also.
Mhm. Yeah, and we didn't mention rental also. If you have a rental
Yes,
property, also
rental
you
property.
need to actually take depreciation, expenses that you expense, that can save you a lot of money. That's on your 1040.
Yeah,
So make sure don't miss that. And that actually it's the entire work, like it's like having a business if you have a rental. So
yeah,
don't be surprised if it's going to cost you a little bit more to do your taxes, because it's a lot of actually work. And I've seen a lot of people miss to
yeah,
take depreciation, miss to take actually maintenance, and all of these like expenses that you do for your rental, and you end up paying a lot of more taxes. So make sure you don't miss those. And I wouldn't rely on my own. Like if you are doing your taxes, like using TurboTax or all of these things, make sure, like I'm sure, like you're missing a lot of stuff.
yeah,
Like, you're losing a lot of money there. And I have had a lot of clients actually
yeah,
come to me, and then they realized that how much money they lost. And I know, Shane, also you had the same
yeah,
experience.
absolutely. And
Yeah.
you see, when we just had this conversation, it's lots of forms we talked about. You heard there's a lot of forms. There's Schedule E, Schedule C, 1120S, 1120. It's so many different forms. So there's some of you that have multiple of these forms, and if you do have it, it means you're probably out there winning because you have multiple businesses and you're doing all of these things to increase your revenue, and they're great. But all of these forms, it do take time to complete. You have to we have to be meticulous on completing these. You have to try to find the best deductions we possibly can and the credits that are associated with that. So the more forms you have, the more money it's going to cost you to get your taxes done, because it's not going to be simple as somebody who has one job and no dependents, or even if they only have a few dependents in one job. That tax return is going to be a lot smaller than someone who has rental property. They have a C corporation. They have dividends. They have stocks. They have all these multiple streams of income. Those taxes is going to be like that thick, and those
Mm-hmm.
forms are going to be with it. So when you come and you're like, well, how much you charge? We charge by the form. That's how much we charge. And don't think you're going to get your taxes done for $500, and you have a tax return that's that big, 100 pages or more. Sometimes for some people, 50 pages. Sometimes it can be up there. And it's not that we're trying to scam you or anything like that. We're not trying to take all your money. Whether you made $1 million or you made $50,000, the forms are the forms.
Mm-hmm.
Okay, forms are the form. Now other people, they might be doing other things, but we are not those other people. We charge based on the forms. We don't charge based on how much we're going to get you back.
Mm-hmm. And one more thing, actually, if you do have a foreign bank account, don't miss that Schedule B, because you need to include Schedule B, because there's like two questions you need to answer there.
Yeah,
Like you need to answer, do you have a foreign bank account? And you
yeah,
say yes. And then there's another question, do you have to file FBAR? And
yeah,
that's the answer. The answer for that is if you have had like $10,000 or more during the year, even for one day, or
yeah,
like multiple account, like if you add them up, they're $10,000.
yeah,
Then, and that's any financial institution, actually, not only bank account. Then you have to file FR, and you have to say yes if you had that. If not, like you say no. If you said yes, you have to file FBAR, and that is
yeah.
separate. And also, if you get the book, my chapters talk about FBAR. So get the book, and here's our links, like in the screen. So we both have the book. So whatever, like order from any of us, the same book, like go ahead and do that. And then also book a consultation, and yeah, come on in and let's do your taxes. Don't delay.
Absolutely,
Don't delay.
absolutely. So I hope we helped you guys break some things down, explain some of these forms and these schedules and what's the difference between them and the requirements that you're going to be needing on your end. So I hope we explained it to help you out a little bit more, and just contact us, or if not us, contact somebody that know what they're talking about, so you guys can be on the right page. We want you guys to win too.
Yeah, awesome. At least now you know exactly what you have to do. Listen to this again. If you have any question, let us know. We will go back like and talk about more stuff, and we can answer your comments as well. Like this is going, I know, like for you guys, like LinkedIn and everywhere else, like YouTube, we will go to those links and see if you have any question. I will be happy to answer those. And yeah, just go do your taxes. Make sure you don't do it on your own. Make sure you do know what you're doing. Get the book. It's gonna guide you. Even if you go to someone else, like you will be informed and you can ask the right question. And that's it. I mean, we'll see you later. Like, do you have anything to add, Shane, like before we
No,
end?
that's it. I mean,
Oh,
I'm sure you're sick of me talking, so that's it. That's it.
okay. Awesome. Talk to you
Have a
soon,
good
guys.
day.
Bye.